Financial Planner, Flow on YouTube.
John, thank you so much for joining us today.
Thanks for having me again, Elijah.
All right. Now, I'd first like to discuss the recent announcement from China. China is outlawing initial coin offerings. Can you explain a little bit about what this means for cryptocurrencies?
Well, it really first started with the U.S. Securities and Exchange Commission starting to regulate ICOs. It's a little bit different than a cryptocurrency. An ICO is kind of more like a cryptocurrency within a cryptocurrency. So the way it works is that people, say, have Ethereum, and the people who are starting a new cryptocurrency do that through Ethereum. And so if you want to get in on this ICO, you send a certain amount of Ethereum, and that you're promised a certain amount of shares. So they're using the term shares, which really just means number of coins, and ICO, which kind of rhymes with IPO. But in reality, it's just a coin within a coin. So why is the regulation happening? Well, I think the regulation is happening because they're scared of cryptocurrencies, but they're using this sort of backdoor of ICO and saying that, well, people are going to be defrauded. Well, people have been defrauded by a lot of things, including governments. But, I say let the buyer beware, do your own due diligence. There's a lot of things people can be scammed with, and I really don't prefer to have some type of monolithic, overreaching big brother to police everybody's investment decision. But if you think about, what this means, I mean, it's kind of shocking because if you look at the definition of a security, so Bitcoin, governments have had a hard time defining what they mean by, or what Bitcoin is. Is it money? Is it an asset? Is it, what exactly is it? So if you look up the definition of a security is a financial instrument that can be traded back and forth. And then if you look up financial instrument, it's something that can be purchased with money, basically. So in a way, the governments of the United States and China have declared cryptocurrencies to be money. So I don't think that's what they really wanted to do. And we kind of see the reaction now is we sold off from about 5,000 down to 4,000 on Bitcoin. We're back up to 4,600. And they're basically admitting that it's money. And if it wasn't money, then why are they regulating it? So they're just lending credence to it.
So you talked about how the powers that be are scared of Bitcoin. Why do you think that is? And also, do you think there will be more regulations against cryptocurrencies?
They're scared of cryptocurrencies because their power base, it relies on control of money. If they don't control money, their power is severely withered away, if not wiped out. So I've made the analogy before of things like the post office being wiped out by email. We can talk about taxis being wiped out by Uber. We can talk about classified advertisements being wiped out by Craigslist. These are disruptive technologies, and they change the existing order. Now, I have always said from the beginning, since I discovered Bitcoin in June of 2011, that Bitcoin will destroy the bankers' monopoly on money. I believe that from the beginning, and I believe they believe that. I think they're fighting a losing battle. I think they know they're fighting a losing battle. I think they're the post office waiting to go out of business. Money is going to be something that governments don't control. And that's going to change the game, because that means they're going to have to fund their operations through taxes. Through taxes that are voted on, through actual constituencies that are represented by their politicians, which we don't have. We have a fiat Ponzi debt pyramid right now, promising everyone everything, which is going to collapse on itself. And the system that would replace it, if I'm correct, the cryptocurrencies will replace fiat, government-issued fiat currencies. Then if that's the case, then there's going to be severe restructuring of government services. And that means a consequent severe reduction in the power of government.
No, I know. I think it was last time we had you on, you were saying that the market cap for pretty much all cryptocurrencies is around $100 billion. And by the end of the year, you would expect the cryptocurrency market cap to be about $1 trillion. Can you give us an update on this? Is that still your view?
Well, I said it could be. Actually, I also said that it could go down 90%, which it's done probably 3 or 4 times now since Bitcoin started trading at a penny. It's had at least 3 90% bear markets. Now, after we talked, the entire market actually went down in the face of the SegWit. Well, it wasn't really SegWit, but it was another. It was a hard fork in Bitcoin that happened August 1st. And we went down to about $60 billion total market cap for cryptocurrencies. We're now at $166 billion. So I'll stand by that. I think that it's quite possible to see $1 trillion by the end of the year. The reason why I made that prediction is not so much because I think that, this market can't slow down or won't go down, but I'm just looking at the amount of money, of debt money that governments have created. And we know that China, with this, China's been doing everything they can to stop cryptocurrencies, even though they say, oh, we're just trying to make them safe, or, oh, we just want to have regulation or whatever. But the bottom line is that China understands that cryptocurrencies give their population the ability to get their assets out of the country. And that's what governments hate. That's why governments have capital controls. But unfortunately for these governments, unless they can bring in a one world government, there are going to be some friendly governments out there like Panama, Japan, and others who want that money. And they will allow cryptocurrencies to trade and not restrict them with endless regulation. And the money's going to flow there. So I don't think they can stop it. They're going to try. I think China wants to have the world reserve currency. I think China wants to be the next United States so that they can have a world reserve currency. They can force the entire world to use their gold-backed yuan or whatever it is. And then they get all of that seigniorage advantage, which means that they reap tremendous benefits from just having the currency that everybody saves in, because that's a currency they need to do international transactions. That's what's benefited the dollar for the last, 50 to 100 years is that seigniorage. I can never pronounce that correctly. But it's just the advantage of having the world international reserve currency. And China, I believe, wants that. But I don't think it's in the cards. I think China knows that something new has come along, cryptocurrencies, and it might not happen for them.
Now, moving our focus to the precious metal markets, I wanted to discuss the recent price action we've been seeing. It seems like they've been skyrocketing for the past month or so. Gold is, above $1,300. It's $1,330 as we speak, and silver is, touching $18. What is your perspective on the recent price action, and where do you see them going from here?
If you look at the technicals, I follow silver a lot more closely than I follow gold, because I think that silver is a much better investment. It's more the common man's sort of investment. There's a lot less of it as far as if you talk about the value per ounce and how many ounces are above ground. People would say, well, there's this many billion ounces of gold and this many billion ounces of silver. above ground in storage. It may be 1-to-1, right? But if you look at the dollar value difference, it's tremendous because of the silver to gold ratio or gold silver ratio being 80-to-1. So silver is by far the best investment. I follow that technically, and if you look at the chart of silver, if you look at the monthly MACD, which is the main technical indicator I use, I don't really like to get into advanced stochastics and all kinds of swing things. I use the basic support, resistance, trend line, and MACD. And what we can see lining up with silver right now is as we're taking out this $18 price, trying to get back up to that old high of 22, the monthly MACD is starting to turn upward towards the zero line. Now, the last time we had that occur was around 2003, 2004, around a price of $4.50 to $5. That was the last time we had a breakout above the zero line of the MACD, and we know what happened there. We got a tenfold run in the price of silver. It ran from $5 to $50 to that top in 2011. So a tenfold run in the price of silver now, assuming that it's around probably $20 when it starts the run, if that's when the breakout occurs through that line. Then a tenfold move is $200 an ounce silver. That would be the equivalent percentage move of what we had the last time we had that technical breakout of the MACD.
So when do you see that occurring, and can you explain a little bit more about what this MACD indicator is?
It's just an indicator that takes moving averages and uses the crossover lines to determine buy and sell points. It's pretty much a trend following technique. So it's just one of the indicators that I follow. And like I said, support and resistance, probably support and resistance are the two most important technical indicators that you can follow, simply because they indicate past behavior of different market players. When you're talking about overhead resistance, you're talking about people who, for example, if you go to a lot of the silver bug sites to this day, you'll hear people whining and complaining about how much they paid for silver. Fortunately, I didn't buy during the big run-up. I think the most I ever paid for silver was $32. But you'll hear a lot of people whining and complaining about how they're still down. But that's not the real reason you want to stack silver. But nevertheless, some of those people that are down will wait until they're even. It's not that it makes a lot of sense, but it's just human nature. And those people will wait until they're even and then sell. So what that creates is overhead selling pressure. That's called overhead resistance. And that's people who are at a loss waiting to get out. And once they see the price where they got in, they sell and get out. And so that's kind of tends to put a ceiling on the price as it rises. Now, that's also the reason why, as Jesse Livermore pointed out, the greatest trader of all time, that a market that's moving into new highs, that's at a price that it's never been before, such as Bitcoin, that's the most bullish scenario you can possibly have. Because what that means is that nobody who owns that asset has a loss. The only reason they have to sell is to take a profit. They're not waiting to get even. So that's very bullish, and that's the type of formation we want to see in silver. So we want to see the MACD, we want to see the moving averages cross to the upside, which is kind of going to give us an indication that we're beginning an uptrend. And then we want to see a breakthrough, a breakout through the overhead resistance around 22, which is the last time we got a lot of selling. Now, you have to keep in mind with all of this that gold and silver are incredibly manipulated markets. So that reduces the value of technical indicators. They still seem to work, but they also can do very, very strange reversals. And we've seen, the midnight selling, we've seen the midnight massacres, we've seen the, Japan at 3 a.m. selling $1 billion worth of silver that doesn't exist. That is outside of normal technical indicators.
Now, I'd like to move our focus to the mining sector. What is your perspective on what is occurring right now in the mining sector, and where do you see, if silver is to, skyrocket to, it seems like you're saying, around $200, what do you see for the silver mining sector?
Well, there really isn't much of a silver mining sector anymore because silver is so undervalued that it's primarily mined as a byproduct of base metals. But I've always said that there's no point in investing in something, in a company whose primary method of making money or method of business is to sell a suppressed commodity. It doesn't make a lot of sense to me. So I've said that for the longest time that I'm not interested in buying the shares of something that the government is suppressing its price. It doesn't make sense to me. It's like a guaranteed loser. Now, if you're speculating as to when the manipulation will end, because I would definitely start to do some fundamental analysis of different mining companies and mines once we can be certain that the manipulation has finished, then I would want to look at those numbers. But if you're trying to pick the time when this manipulation is going to end and bet on miners, then yeah, that might be a good idea. But the last run-up we saw in the miners, everybody was convinced this is it. We had big runs, and most of them gave it all back. So until the manipulation ends, I'm not willing to bet. And then, of course, there's all the other risks that you have with paper assets, which is it's somebody else's liability. Somebody has to pay it to you. There's all the legal risks. The laws can be changed. And we've seen the United States government and now China with this ICO law. They don't have too many problems with passing ex post facto laws. It can change things retroactively. You've got country risk. You've got countries that can nationalize their mines and do what Venezuela did to their oil mines and just steal everybody's money. So all of those risks come into play when you're talking about mining shares. None of those risks come into play when you're talking about physical metal held in your hand.
In your perspective, then, what would be like a good, portfolio or a ratio in someone's portfolio to have physical precious metals versus the more speculative paper assets and electronic assets like mining stocks and also electronic assets like Bitcoin and other cryptocurrencies?
I can't give financial advice, so I can't tell people what they should do. I can tell you what I've done. I don't have any mining shares. I have very little precious metals other than physical silver. I have a small percentage of cryptocurrencies, which turned into a very, very large percentage because of the gains. So that percentage of my portfolio has grown. I've recommended on my member site certain points in cryptocurrency market where I thought was a good transitioning point to take some profits in cryptocurrencies and move them into physical metal. I've mentioned before, JM Bullion is one and Provident Metals is another. There are probably others. Those are just two that I know of. I don't have any sponsorship with them. They're just two that I know of that take cryptocurrencies and actually give you a pretty good price, basically the bank wire price for buying with cryptocurrencies. And, you can convert that into physical metal. So I have recommended to my members that they might want to think about converting some of these cryptocurrency profits. But that's about it for me. You can say I'm crazy or conservative, but for me, it's silver and Bitcoin and then some speculative altcoins. That's about it.
All right. Well, before we let you go, we had one viewer's question. They're wanting to know about, they are saying that you in 2013 made a video, a silver update on the global silver reserves, and they're wanting to know if you have any recent information or updated information on the world's silver reserves.
Well, that's a difficult question because we just don't know. The governments are in charge of it. It's the U.S. Geological Survey that tells us this, but what is their interest? And I mean, can you really trust the people who I personally believe are behind the suppression of precious metal prices to give us accurate figures as to what those are? There's a lot of people who believe that there's a bunch of gold out there that no one's found or has been hidden or is stashed away, etc. But I think that Steve St. Angelo has done a really good job in exposing that sort of conspiracy as being kind of crazy. I think that you have to talk about how much is in the ground, and the U.S. government counts that. That's kind of crazy that you would count your gold reserves as what you believe is in the ground. You haven't mined yet. Talk about counting your chickens before they've hatched. But silver, I would say, although we don't know the numbers, I would say that silver is far worse situation than gold because, as I've pointed out before, silver is a lighter metal. The larger finds tend to be higher up in the Earth's crust, and most of the really big silver finds have already been found. So my guess is the silver reserves are very, very low if you're talking about unmined silver. And as far as above ground silver stockpiles, it's a horrible situation. No government even admits they have any now. The U.S. government ran out in 2006. Supposedly the SLV has these hundreds of millions of ounces, but nobody can account where those ounces came from because the numbers just don't add up. So I think it's a very, very bullish number, but we're just not going to find out until the manipulation ends.
All right. Well, Brother John F., thank you so much for joining us today. Before we let you go, did you want to share with the viewers any last thoughts you had and where they can find you online?
Yes, they can find me online at brotherjohnf.com, and the member site is brotherjohnf.biz, B-I-Z, where they can sign up for a monthly or yearly fee. I also want to mention an ICO that's coming out recently that I covered in one of my updates. It's called CDX, the Commodity Network, Commodity Ad Network, and it's Steve St. Angelo and Peter Froelich. I don't usually recommend people check things out, especially ICOs, but this one is one that has the potential to compete with the monolithic ad players, and it's a new kind of ad model based upon a cryptocurrency. It's kind of interesting that right when this Chinese crackdown happened, I happened to stumble upon this ICO for this coin. So if people are interested, they can go to that site, commodityadnetwork.com,